Hello, hello, hello. Check, check. Hi, madam. Namaskar. Welcome. Where are you since so many days? Why are you not coming regularly? Don't stand up. Sit down and give me the answer. Where are you? So not coming regularly. Why? Okay, so we'll continue and finish with the balance part, and then we'll going to start with capital gains. Okay, ready everyone? Hello. So the miscellaneous part of this chapter PGBP, we have to do 44 AA, 44 AB, 44 AD, 44 ADA, 44 AE, and the chapter will be done. 44 AA talks about compulsory maintenance of books of accounts. Compulsory maintenance of books of accounts. Now, if you are an assessee, and you are engaged in specified professions, like which professions are there? Total 11 professions are there. You can see the names on your board. First profession is legal. Second one is medical. Third one, engineering. Please repeat. Then architecture. Then accounting profession. Then technical consultant. Then interior decorator. Then CBDT has notified certain professions. Authorized representatives, film artist, company secretary, and IT professional. So total 11 professions are there which are specified professions. Okay. So if you are an assessee, you are engaged in any of these specified professions, then you are compulsorily required to maintain prescribed books and documents. See, you have calculated your PGBP income and you are showing that PGBP income taxable to the income tax department, that this is my PGBP income. How they will verify? Even they need to verify that the PGBP income you have shown is correct only. Yes or no? So to verify, they would require the help of your books of accounts. And if you have not maintained your books of accounts, will they be able to calculate your PGBP income? No. So in order to make them, calculate your PGBP income, they would require the help of your books of accounts. So they are telling you to compulsorily maintain your books of accounts. Whenever we want, we can ask that books of accounts from you. And that time you should not be saying that we don't have books of accounts. Yes or no? So which books of accounts you should maintain? Prescribed books. Where the books are prescribed? Rule 6F. What books are prescribed? Cash book, journal, ledger, carbon copy. CC means carbon copy of bills which are issued to the clients, which must be serially or machine numbered. And then point number 5, original bills for expenses incurred in your profession. Yes or no? So all these 5 books and documents are compulsorily required to be maintained by you. Compulsory. If you are doing these specified professions. But wait, you will be required to maintain them only if your gross receipts from your profession in all the last 3 previous years was more than 1,50,000 each year. Yes or no? So you have to see in the last 3 years, every year your gross receipt from the profession should be more than, yes. If this condition is fulfilled, then in this year compulsory these prescribed books are to be maintained. Yes or no? Hello? But what if your business is a new business? What if your profession is a new profession? Or 3 years have not yet gone. Meaning this must be your second year only. Last year you have started your business. Or this must be your third year because you have started business last year. 3 years, past 3 years data is not available. Then in the current previous year, if the gross receipt is likely to be more than, then also compulsorily rule 6F, the prescribed books you are supposed to maintain. Yes or no? Now, if you are a doctor engaged in medical profession, then additional 2 books are supposed to be maintained. Additional 2 books and documents you are supposed to maintain. Number 1, daily case register and inventory. Doctor will have inventory of what? Doctor will have inventory of all the medicines, yes, consumables, etc. The items which he will be using to treat his patient, he will have the stock of those items. So stock register, meaning inventory register of those items, will also be required to be maintained. Yes or no? Did you understand this? 2 marks, straight question they will ask. They will give you a case, and in that case they will tell you last 3 years gross receipt was this much, this much, this much. Assessee is in the business of interior decoration. With the help of the relevant provisions of the Income Tax Act, discuss whether the books of accounts are required to be maintained or not. If yes, then which books are supposed to be maintained? 2 marks question, direct question. And what you will write? General knowledge. If you will write anything other than this, you will not get a single mark in that question. Getting my point? So now, tell me, did you understand this part A? Did you understand part A? Come to part B. Now you are an assessee engaged in which business, which profession? As above, those 11 profession, but not covered above in point number A. Why are you not covered in point number A? Because last 3 years gross receipt in all the 3 years was not more than 1,50,000, or this year it is not likely to be more than 1,50,000. So definitely you will not be covered by point number A, you will be covered by point number B. Will you be required to compulsorily maintain your books of accounts? The answer is yes. You also will be required to compulsorily maintain your books and documents. Which books? These books? No. See, I have specifically written in point number A only, the prescribed books and documents are to be maintained as per rule 6F in point number A only. In point number B, they have not prescribed any books and documents. But still they are saying that compulsorily you are also supposed to maintain books and accounts. Now, which books and accounts you will maintain? Prescribed books? The answer is no. You will maintain such books and documents as would enable your assessing officer to determine your total income. Maintain books. But whenever the assessing officer will require your books of accounts, you will have to produce such books to him as would help him, enable him to calculate your total income. We are not prescribing any special books for you. Getting my point? Hello? So tell me, special books are prescribed for whom? The assessee is covered in point number A. But if you are an assessee doing the specified profession only, but not covered in point number A, meaning this condition was not satisfied, then definitely you are going to come to point number B. Which books you are supposed to maintain? Which books? Prescribed in rule 6F? No. Such books and documents as would enable the assessing officer to determine the total income. You will maintain such books. Yes or no? Now tell me. Point number C is there. Point number C. You are an assessee. Now you are engaged in any business or any profession other than specified profession. Are you doing specified profession? No. Specified profession already. Point number A, point number B. Done. Now you can be doing any other profession or any business, and you are an individual or HUF. Then you have to compulsorily maintain your books and documents. Which books and documents? As would enable the assessing officer to determine your total income. For you also, there is no books prescribed. Getting my point? Hello? So, individual and HUF will maintain his books and documents only if the turnover is more than 25 lakhs or the taxable PGBP income is more than 2.5 lakhs in any of the last 3 previous years. So last 3 previous years you have to check. In the last 3 previous year, any single year, not all the 3 years, any single year, your turnover was more than 25 lakhs, or your taxable PGBP income was more than 2.5 lakhs, then compulsorily you are supposed to maintain your books and documents. Which books and documents? Prescribed? No. Such books as would enable the assessing officer to determine your total income. But sir, I am an assessee, I am not an individual or HUF, I am any other assessee, person other than individual HUF. Then for you, the turnover checked will be 10 lakhs and taxable PGBP income should be more than 1.25 lakhs. Instead of 25, you will take 10 lakh. Instead of 2.5 lakhs, you will check. So in any of the last 3 previous years, your turnover was more than 10 lakhs or your taxable PGBP income was more than, then you also compulsorily required to maintain your books and documents. Which books? Prescribed books? Such books. Yes or no? But sir, this can happen only if the business is old, profession is old. What if in the case of new business or new profession? Then what are you going to do in that case? Come on, tell me. Then you will have to check that in the current previous year, in the turnover is likely to be more than 25 lakhs or taxable PGBP income likely to be more than, here turnover is likely to be more than, or taxable PGBP income likely to be more than, you expect that it will be more than 25 lakhs or 10 lakhs turnover. You expect that taxable PGBP income will be more than 2.5 lakhs or 1.5 lakhs or 1.2 lakhs. Then also you are supposed to compulsorily maintain the books and documents. Did you understand? Hello? This was your section number 44AA. Very easy section, very easy section. And from miscellaneous part, if this is asked in the question, trust me, it will be in your MCQ as a case study, or a small question of 2 to 4 marks can be asked on this concept. Don't leave. These are cash marks in the exams. Getting my point? Okay. Now, what if you don't fulfill the requirements of 44AA? What if you don't fulfill the requirements of 44AA? Meaning failure to comply with the provisions of 44AA will result into penalty under section 271A. What is the amount of penalty? Flat 25,000 penalty. Yes or no? Hello. Now, where the books and documents are supposed to be maintained? You are going to you are supposed to maintain the books and documents as your usual place of business or profession. If more than one place of business or profession is there, then you are supposed to maintain at principal place of your business or profession, main place, head office. Yes or no? And for these are supposed to be maintained for at least 6 years from the end of the. So what is your previous year? Come on, tell me. 24, 25. 6 years from the end of the previous year. The books for this year needs to be maintained for 6 years from the end of the relevant assessment year. So books for 24-25 should be maintained for 6 years starting from the end of assessment year 25-26. So from the end of this year for 6 years, meaning 2027, 28, 29, 30, 31 and 32. Till 31st March 2032, the books for previous year 24-25 should be there, because during this period at any time the department can ask for these books. Getting my point? Hello. So this was your 44AA. Done. Now let's come to the tax audit provisions. 44AB. Again an important section. 44AB says that the books and documents of your business or profession will be compulsorily required to be audited by a respectful person, by a practicing chartered accountant. Why? What is the requirement to get the books and documents audited? Ultimately, we would require your books in future. to verify that what should be your taxable PGBP income, whether you are showing the PGBP income correctly or not. To verify that, we would require your books. Who will maintain those books? You only will maintain that books. Hello? But there are bright chances that you can manipulate the books. So how do we trust that the books and documents gives a true and fair view? Yes or no? So there has to be some person whose signature has to be there, whose stamping should be there. Hello? Who should verify that no, the books of accounts, documents which you have maintained are reliable. So the books must be audited. Books must be audited. So there are provisions given under 44AB for compulsory audit of your books and documents. Now, in what cases the books and documents are compulsorily required to be audited? See, assessee is engaged in any business. Did I write profession or any business only? So if you are an assessee, you are engaged in any business and the turnover of that business in the current previous year is more than compulsory for that business, the books should be maintained separately. Books and documents should be maintained separately and it must be audited also. For example, I have two businesses. One is my coaching business, another one is my cafe business. Yes or no? So for my coaching business, the turnover is 60 lakhs. But in my cafe business, the turnover is 5 crores. Should I maintain the books of both the business together or separately? I have to compulsorily maintain the books and documents separately for my cafe business. Hello? And I need to get those books and accounts compulsorily audited because for that business the turnover is more than 1 CR. Getting my point, everyone? Now, there is a limit of 10 crore also. In your business, if cash receipts during the previous year is up to 5% of your total receipts in the current year and the cash payments during the previous year is up to 5% of the total payments in that business. So during the previous year, if in your business total receipts are there, 5% or less is in cash. And in that same business, if the payments are happening, so total payments are happening, 5% of that total payments or less is in cash. Meaning 95% or more receipts as well as 95% or more payments must be by way of modes other than cash. Then even if your turnover is more than 1 crore, no requirement for tax audit. For you, the limit for tax audit will be 10 crores. So more than 1 crore, but up to 10 crores, you are not required to get the books audited. Yes or no? But wait, in your business, during the previous year, total receipts were 2 crores, 2.5 crores. Total receipts, 2.5 crores. Total payments happened 2 crores. This is total receipt. This is total payment. What are you going to do? Take 5% of this and take 5% of this. What is the 5%? Come on, tell me. 12 lakh? 12.5 lakhs. Yes or no? And what is the 5% of that? 12 lakhs. 5% of 2 crores. No, it will be 10 lakhs. It will be. Now pay attention. In this previous year, what was your total receipts? 2 point? So your cash receipts should not be more than 12.5 lakhs. Yes or no? In this year, total payments. So your cash payment should not be more than. Now the information will be given. During the previous year, your cash receipts were 11 lakhs. Cash receipts and cash payments were 8 lakhs only. Is the cash receipt and cash payment within the limits? Is the cash receipts and cash payments within the limits? Then even if the turnover of your business is more than 1 crore, no need to get the books and documents audited. Yes or no? For you, the limit of 10 crores will be applicable. Yes or no? But wait, what if this was 21 lakhs? Cash receipts 21 lakhs, but cash payment is within limit. Cash payment is only 8 lakhs within the limit of 10 lakhs. Yes or no? And cash receipts exceeded 5%. That limit of 10 crore will not be available. If you want to have that limit of 10 crore, both receipt as well as payment must be within the limit of. That is why I have written and I have highlighted it. Yes or no? Now, did you understand this point? If you are an assessee, you are any person engaged in any business, the turnover of your business exceeds, get ready to get the books of accounts audited, compulsory audit. Yes or no? But in your business during the previous year, cash receipts are up to 5% of total receipts. Yes or no? As well as cash payments during the previous year is up to 5% of total payments. Then even if your turnover is more than 1 crore, no need to get the books of accounts audited, because for you the limit will be 10 crore. Okay, then your limit, if it crosses 10 crore, then you also will have to get the books of accounts compulsorily audited. Yes or no? Will you remember this? Hello? Now pay attention. If you are an assessee engaged in any and gross receipt of your profession is more than, get ready. Compulsorily maintain the books and documents separately and get them audited. For you, is there any extra limit given? Like it was given for business? The answer is no. For you, no such extra limit is given. Getting my point? So the extra limit, higher limit is available only in the case of business. But for profession, the moment your gross receipt of the profession exceeds what? 50 lakhs, compulsory maintain the books separately and get them audited. Will you remember? Now, which professions are covered? Tell me. Those 11 professions? Or I have written any profession. Meaning 11 professions are also covered and all other professions are also covered. For any profession during the previous year, gross receipt is more than 50 lakhs. Compulsory maintain separate books and get them audited. Yes or no? Now tell me one thing. Simple thing I am asking you. Okay. You will have to maintain the books. The first duty will be to get the books. Audit must be done. Then what is the proof that audit was done? Yes. So compulsory report must be prepared. Now, this report, audit is done. Audit findings are recorded in the report. Will you communicate that to the income tax department? Yes or no? Will you have to tell the income tax department that, see, there was a requirement on me to get the books audited. Audit is done. Proof is audit report. So you will have to show that audit report to the income tax department also, no? Meaning, till the time you will not file the report, they will not come to know that audit is done and report is made. Yes or no? So the third requirement will be to filing of audit report. So books must be audited. Audit report must be prepared. Yes or no? And that audit report must be filed with the income tax department. Till what time? Till what time? Tell me. There has to be some time limit. 31st? 31st. Why? 31st October. 30th September. Huh? See, whatever you want, you cannot say like that. Please, guys, wake up, huh? It is a wake-up call for you all. You have already attempted the exam once. These things should be on your mouth. You should be giving me fast answers for these things. You haven't studied a single thing. This shows. Tell me, this is your previous year, 24, 25. For this year, you'll have to compulsorily maintain books and get the books audited. When the audit should happen for this year? When the audit report should be made for this year? And when the audit report should be filed to the income tax department for this year? Everything happens after the year ends in the assessment year. So assessment year will come. So in this assessment year 25, 26, audit will be done. Audit report will be prepared and that audit report will also be filed. But there has to be some cut-off date. All these activities should happen, must complete on or before a particular date. So what is the due date for getting the audit done, audit report prepared and getting that audit report filed with the income tax department? So they have said that the due date for filing the return of income, due date for the date which comes immediately 1 month prior to that. What, madam? 1 month. The date which comes immediately 1 month prior to the due date of filing your ROI. Now for this year, the due date of filing ROI will be either 31st July or 31st October. So now you'll have to understand that what will be the due date applicable for those assessees who are covered by tax audit. So for that you are supposed to go to section 139. Section 139(1) says that if you are a company, for you the due date for filing ROI of this year will be 31st October of your assessment year. 31st October of your, whether you are covered by tax audit provisions or not covered by tax audit provision. If you are a company, then for you the due date of filing ROI is 31st October. Due date is. But if you are not a company, other than company, and you are covered by tax audit provisions of 44AB. So assessee is not a company. Assessee is any other person. But that assessee is covered by tax audit provisions. So for that assessee also, the due date will be due date for this previous year. Due date of filing ROI. Due date of filing ROI will be 31st October of the assessment year. So for two assessees, the due date is any company. Due date of filing ROI. Any company, due date for filing ROI is 31st October. Assessees other than company, for them also the due date will be 31st October, provided they are covered by tax audit provisions. Yes or no? Now, for example, if this assessee is a partnership firm, assessee is covered by tax audit provision. So, for the firm, the due date will be 31st October, and for all the partners of the firm also, the due date will be 31st October. Yes or no? Hello, sir. So, if I say, in the case of companies, companies. Then next, assessees. Assessees. Other than company. And partner of the firm which is covered by tax audit provisions. Yes or no? So every partner of that firm. So for all these assessees, due date of filing ROI for previous year 24-25, what will be the due date? 31st October of the assessment year 25-26. So on or before 31st October, you are supposed to compulsorily file your ROI if you are any of these assessees. Yes or no? And every other case, what did I say? Every other case, the due date will be 31st July of the assessment year 25-26. So these are the due dates given in section 139(1). This is the due date of filing ROI. The date which comes immediately 1 month prior to this. The date which comes immediately 1 month prior to this will be the date on or before which your tax audit should happen. Tax audit report should be prepared, and that tax audit report must be filed also. Getting my point? So tell me, if you are an assessee, okay, this is your previous year 24-25. In this previous year, for this previous year, your this is the assessee, and now this assessee is covered by the provisions of 44AB, tax audit compulsorily required. So this assessee will get the audit done, report prepared, and get the audit report filed with the income tax department on or before 30th September of the assessment year, which is the date which comes immediately 1 month prior to due date of filing ROI by these assessees. What will be the due date of filing ROI for the assessees who are covered by tax audit? The due date of ROI will be 31st October 2000. So 1 month prior to that, 1 month, whatever is the date, that date is 30th September. On or before 30th September, audit must be done. Audit report must be prepared, and that audit report must be filed on or before with the income tax department. Will you remember this? Yes or no? This was your tax audit provisions. Now pay attention. Next thing I am saying, that the assessee either covered in point number A or covered in point number 2, okay, they will have to compulsorily get audit report filing. What is the time limit? On or before the date which is immediately 1 month preceding to the due date of filing ROI. So for our previous year 24-25, the ROI due date was 31st October 2025. 1 month prior to that, 30th September 2025. This I have already told you. Okay. Now tell me one thing. What are the due dates of filing ROI? I have already told you all these. Due date of filing ROI. This 30th November, no need to remember. Only remember 31st October and 31st July. Okay. Now pay attention. Now the audit report has to be maintained, has to be prepared in a prescribed format. Prescribed. So format to prepare audit report is Form 3CA or Form 3CB. Form 3CA or Form, but whatever is the form, this is the format for making the audit report. Format for making the. Now pay attention. If you are an assessee, who is compulsorily required to get their books of accounts and documents audited under the Income Tax Act, meaning for you 44AB is applicable. And if 44AB is applicable, you are compulsorily required to get the books and documents audited for income tax purpose. But sir, for me, there was some other law which was getting applicable, and as per other law, my books, I have already got them audited. So you need to get them audited once more. Audited books are again audited for income tax purpose. No need. Why? Because your books are already audited once. Getting my point? But the books are already audited once for other law. So that audit report will be made for that law. Getting my point? That audit report might not be useful for income tax purpose. So for income tax purpose, a separate audit report must be prepared. No need to get the books of accounts audited once again. Getting my point? Because your books were audited once as per other law. For example, there is a company law. Company law puts a requirement on the company that the books must be audited. So books of the companies are already audited as per company's law. Yes or no? And on that company, the tax audit provisions are applicable. Tax audit provisions are. So will the company get the books of accounts audited once again? No. But that company will have to compulsorily get an audit report prepared for income tax purpose, separate audit report, because the audit report which was prepared as per company's law may not be useful for income tax purposes. Yes or no? So a separate audit report must be prepared, and that audit report will be prepared in Form 3CA. Audit report for income tax purpose will be prepared in form if books and documents are already audited under other laws. No need to get them audited once again, but at least for income tax purpose, prepare a separate audit report. Getting my point? Now say, what if there was no law which required you to get the books audited? Then are your books audited? But you are covered in 44AB. Now bloody at least get the books of accounts audited once for income tax purpose now. Now the books will be compulsorily audited also, and the audit report will also be prepared. But now the audit report will be prepared in Form 3CB. If books and documents are audited for the first time for income tax purpose, then the books will be audited and audit report will be prepared in Form 3CB. Now whatever is the form 3CA is there, Form 3CB is there, along with the form audit report, another form is attached. That is known as statement of particulars. What will you call this? Name of the assessee and legal status, means the assessee is the partnership form, company, yes or no? But what is the legal status of the assessee? Then for example, if the legal status is partnership form, then who are the partners? What is the profit sharing ratio of those partners? These partners are the partners in other partnership forms or not? Yes or no? Details of those partnership forms. So many particulars which are very important for the income tax purpose to be recorded are given in statement of particulars, which is prepared in this format, and the format is Form 3CD. All this will be done only if you are covered by point number 1 and point number 2. If you are covered by point number 1, point number 2, meaning tax audit provisions are compulsory for you. Prepare the books separately, get them audited. No need to get them audited separately once again if they are already audited under any other law, but the report will be made in form 3CA along with form 3CD. But if the books are not audited under any other law, then get them audited for income tax purpose, and the audit report will be made in form 3CB along with form 3CD. All this activity, audit report and filing of audit report must be done within the time limit. Within the, what is the time limit? Date, which comes immediately 1 month prior to due date of filing your ROI. And what is the due date of filing ROI for those assessees who are covered by 44AB? 31st October. Will you remember this? Trust me, if a question comes on this point, a small case study will be prepared. 4 marks direct question comes. And bloody, if you don't give the correct answer, even after teaching so well, take some water. This is so easy. Did you all, did you cover this provision in your last attempt? This was there in your syllabus. And if you are not covering all these things, putting the things in option, so for ICI, you are also an option. You are not a main chartered accountant. You are an optional. Whenever we will want, we will pass you that thing. Hello? Will you remember 44AA and 44AB? Everyone? This is the end. Now, one of the most important section, 44AD. If you understand this section, 44AD, then 44ADA and 44AE will be just a piece of cake for you. Very easy. Very easy. This is comparatively bit difficult as compared to those two provisions. But see, actually this provision is not difficult. Very easy. Understand. Are you an assessee? You must be a individual HUF or a, and for the purpose of 44AD, form does not include, meaning the provisions of 44AD are not applicable on LLPs. LLPs cannot take the advantage of 44AD. Yes or no? Other than LLP, if normal partnership form is there, then okay. Normal partnership form can take the benefit of 44AD. But the assessee must be a individual HUF or a firm. Now this assessee is engaged in any business, means any business other than specified professions given in 44AA. Do you remember those 11 professions? Doctor, lawyer, chartered accountant, authorized representative, company secretary, film artist, which we covered in 44AA. Just now, 10 minutes back. Yes or no? So, are you doing any specified profession? No. You are doing any business other than specified profession, transport business, agency business, and commission and brokerage. For these assessees, the provisions of 44AD are not applicable. These assessees cannot take the benefit of 44AD. So if you want to take the benefit of 44AD, you must do any business other than these. Now from that business, your turnover during the previous year should not be more than 2 crores. So what should be your turnover? 2 crores or less. Then you have the option. You have to declare the 8% of your turnover. Declare 8% of your turnover as what? PGBP income. Take your turnover, calculate 8%, at least 8% or more amount you show as your PGBP income. Now what benefit you will get by doing this? No need to remember the deductions, disallowances, this, that, yes or no. So the entire Income Tax Act, PGBP, becomes a little bit, difficult. You are a businessman, a small businessman, not having turnover more than 2 crores. Why are you getting involved in all such things? remembering the deductions, disallowances, this, that, and on top of that, if your turnover exceeds 1 CR, you'll have to maintain the books separately, you'll have to get them audited. Yes or no? Save yourself some time. Focus on your business. So do one thing, no. Just maintain the details of your turnover. Whatever will be your turnover for this year, hello, that turnover should not be more than 2 crores. Show at least 8% of your turnover as your profit. No need to maintain the books for the business. No need to get them audited also. Even if the turnover is more than 1 CR, still no need to get the books audited. But your turnover should not exceed 2 crores. And remember, all the deductions which are available from section 30 to 37(1), it will be assumed as if you have claimed all the deductions and we have allowed all the deductions. Those deductions will not be separately allowed. 30 to 37(1), it will be assumed as if you have claimed them and the department has allowed those deductions. Show only 8% or more. See, actually you are earning more profits, then you can show more profits also. But at least 8% also you will show, that is good for us as your profits. So instead of calculating the profits on a regular basis, normal, by following normal provisions, you have the option. This is not compulsory. If you want, you can show your PGBP profits like this also. So now tell me, the entire exercise we have done so far, remembering the deductions, disallowances, yes or no, what is allowed, what is disallowed, everything will be ignored. Why? Because you are showing your profits as per 44 AD provisions. These are known as presumptive provisions. Your profits and gains from the business or profession will be presumed to be 8% or more of your turnover. Getting my point? Hello, sir. So, who is the assessee? Resident. Individual HUF? Other than? Engaged in? Other than? Specified professions under section 44 AA subsection 1. Other than? Agency business. Other than these business, if the assessee is engaged in any business, assessee is engaged in, and the turnover of that business during the previous year does not exceed, turnover is 2 crores or less than 2 crores. Turnover is 2 crores or less than 2 crores, then 8% of such turnover, 8% of such or a higher amount can be shown as your PGBP income. And if you show this amount as your PGBP income, deduction under 30 to 37(1) assumed to be claimed and allowed. Meaning, will they be separately allowed or not allowed? Not allowed. No need to maintain your books. No need to get them audited. See, they have just told you that these deductions will not be allowed. Yes or no? Meaning that once you have calculated your PGBP income on a presumptive basis, and that PGBP income you are charging under the head business profession, yes or no? And once your GTI will be calculated, from that GTI, the chapter 6A deduction will be available from all the incomes, including your PGBP income calculated under section 44 AD. There is no restriction on chapter 6A deduction. Getting my point? Hello, sir. So chapter 6A deductions will be allowed. Chapter 6A deductions are claimed from GTI. Your GTI will include all your incomes, including PGBP income calculated as per presumptive provisions. So your GTI includes PGBP income calculated on presumptive provisions, and from your GTI, if you are claiming chapter 6A deduction, meaning the deductions are allowed from entire GTI, including PGBP income computed on presumptive basis. No restriction on chapter 6A deduction. You will still get these deduction, but deduction available under the head PGBP will not be separately allowed. Restriction is only on these deductions. Getting my point? Hello, sir. Hello, sir. Will you remember? But wait, how much percentage you are supposed to show? How much percentage you are supposed to show? But if the turnover of the current previous year is received on or before the due date of ROI under section, what will be the due date of ROI? Don't tell me 31st October, I'll give you a tight slap. 31st October is the due date when tax audit provisions are applicable. Hello? Here, the tax audit provisions will not be applicable only. Getting my point? Tax audit provisions will be applicable only if your turnover exceeds 2 crores and you are not liable. Then you are not eligible for 44AD. If you are not eligible for 44AD because your turnover exceeds 2 crores, then only the tax audit provisions are applicable. Then only your due date will be 31st October. But if you are covered in 44AD, if you are covered in books of accounts, not required, audit. So if you are not covered by tax audit provision, 31st October due date is not applicable. What is the due date? 31st July. 31st July. So on or before the due date of filing ROI of 31st of the previous year, on or before the due date of filing ROI, if the turnover is received, if the turnover is by way of prescribed modes. So for that turnover, instead of 8%, you can offer 6% also. Getting my point? So for example, this was your previous year. Previous year, 24, 25. Yes or no? In this previous year, your turnover for this previous year was 1.8 CR. Possible, not possible? Less than 2 crores or more than 2 crores? On this entire turnover, you are supposed to show 8% minimum as profits or more amount. Yes or no? But wait, out of this turnover, some turnover is received in 24, 25 itself. Some turnover is received in, and some turnover is received in next year in 25, 26. This entire turnover is received in two parts. Out of this turnover, some turnover is received in this year and some part of the turnover you received in the next year. Now the turnover which you receive in the next year, the turnover you receive in the, some will be on or before 31st July, meaning the due date of filing ROI 31st July. Yes or no? And some turnover will be received after 31st July. Right? No? Remember one thing. Entire turnover you are supposed to offer 8%. Entire turnover you are supposed to calculate. But the turnover which you have received during the previous year or on or before the due date of filing your ROI of this year, by way of prescribed modes, by way of, on that turnover instead of 8% you can show 6% also. Hello? So can I say out of 1.8 CR, some turnover you received in this year? PM, prescribed modes, and OM, other than prescribed modes. Yes or no? Hello? Here also, prescribed modes, other than prescribed modes. Here also, prescribed modes, other than prescribed modes. Now tell me, what was your total turnover? Is it up to 2 crores? Within 2 crores? On this entire turnover you are supposed to show? On this entire turnover you are supposed to show? Yes or no? Now out of this, on some turnover you can show 6% also. You can show, but that turnover should be received in this year only by way of prescribed modes. Or that turnover should be received on or before the due date of filing your ROI by way of, for example, the turnover received in 24-25 was 1.2 CR. Possible or not? Possible or not? Out of that, 1 CR is received in this year by way of prescribed mode. 0.2 CR. 0.2 CR means 20 lakhs. Received in this year only, but other than prescribed modes. How much is remaining? 0.6 CR. 0.6 CR received in next year. Received in, out of that 0.5 CR you received on or before the due date of filing ROI. On or before the due date of filing. And out of that 0.4 CR you received by way of prescribed modes. And 0.1 CR you received by way of other than prescribed. See, out of 0.6, 0.5 you are received in on or before due date. So meaning that 0.1 CR you are receiving on or after the, out of that 0.05 CR, 0.05 CR means 5 lakhs. You are receiving prescribed modes other than prescribed modes. Entire 1.8 crores is bifurcated like this. On the entire 1.8 crore, you are supposed to show 8% in this year only. 8% in. But tell me, some turnover out of this received in this year by way of, on this you will show, or some turnover out of this you received in the next year on or before the due date by way of prescribed mode. On that also you are supposed to show. On the balance entire turnover you are supposed to show 8%. So only identify that turnover out of current year's turnover, identify that turnover which was received in this year for received in this year by way of prescribed modes. Identify that turnover which was received on or before the due date of filing ROI by way of prescribed mode. On that turnover calculate 6%. Calculate. Now tell me, 1 crore into 6% will be? 1 crore into 6% will be 6 lakhs. 40 lakhs into 6% will be 2.4 lakhs. 2 point. Now tell me, 1 crore and 0.4 crore, meaning 1.4 crores out of 1.8 is received on or before the due date. On or before the due date of filing ROI by way of prescribed modes. On that you have calculated 6%. How much is remaining? 40 lakhs. How much is remaining? This is 20 lakhs. This is 10 lakhs. And this is, on this entire, we are going to calculate 8%, 8% and 8%. So what will be the 8% of 20 lakhs? 1.6 lakhs. Yes or no? What will be 8% of 10 lakhs? 80,000, meaning 0.8 lakh. What will be 8% of 10 lakh? Again, it will be 0.8 lakhs. Yes or no? So now tell me, 6 lakh plus 1 lakh 60,000 plus 2 lakh 40,000 plus 80,000 plus 80,000. Huh? 11 lakh 60,000. This should be your minimum PGBP income. This should be your. I have tried to complicate it as much as I can, and I have tried to simplify it as much as I can. Hello? Now, if I give you one more example like this, can you give me the answer for that? The turnover for previous year 24-25 was 2 crores. First question, 44 AD, available, not available? Available. So turnover should be 2 crores or less than 2 crores. 44 AD will be available. So 2 crores. Now tell me, out of this 2 crores now, received in previous year 24-25 and received in previous year 25-26 means next previous year. Yes or no? Out of this 1.6 crores received in this year and 0.4 crores next year. And they are saying that on or before due date and after due date. On or before due date, after due date. This is prescribed, this is other. This is prescribed, this is other. 0.1, 0.1, 0.1, 0.1. CR means 0.1 CR means 10 lakhs. Yes or no? Now, prescribed modes and other modes 0.2 CR and 1.4 CR. Calculate the minimum income, minimum amount to be taxable under section 44 AD. Give me the answer. Two marks MCQ. Shortcut, apply shortcut. By now you should get your answer also. You will not have this much time in your exam. Identify the turnover which you have received in this year by way of prescribed modes. Identify. Identify the turnover which you have received on or before the due date of filing your ROI by way of prescribed mode. On or before the due date by way of prescribed mode. How much is that? 1.4 plus 1 plus 0.1. 1 point. On this, calculate 6%. And on the balance amount, calculate 8%. Got it or not? So 1.5 into 6% will be 9 lakhs. And on the balance, 0.5, you will calculate 8%. 4 lakhs. 9 plus 4. This will be the minimum amount. This will be the... Because on every amount now you are supposed to apply 8%, 8%, 8%, 8%. No. So why are you calculating 8% for separately for all? Calculate 6% on that turnover which is received in this year or on or before the due date of filing your ROI by way of prescribed modes. Calculate 6% on that. On the balance turnover you are supposed to apply 8% without looking at anything. Getting my point? Hello sir? So this was your 13 lakhs. Will you remember this? So minimum this year, minimum how much PGBP income you are supposed to show? 13 lakhs or higher amount. 13 lakhs or higher amount. Will you remember this? Let's come to the next part now. Let's come to the next part. See, now there was one amendment in last year. And in that case, 44 AD, if the turnover exceeds 2 crores, but up to, still you are going to get the benefit of 44 AD. See, usually you don't get the benefit of 44 AD if the turnover is more than, but one exception they have given, that in this exceptional case, even if the turnover is more than 2 crores, but it should not be more than, still you will be eligible to claim the benefit of 44 AD. And what is that exception? Your 5% or less of your turnover is in, meaning out of the total turnover, Calculate 5%. Calculate 5%. So for example, in my example which I gave right now, okay, no? What was the turnover? 2 crores. What was the turnover? Calculate 5% of this. 10 lakhs. Meaning that 10 lakhs or less should have been received by cash. 10 lakhs or less should have been received by, see, cash, cash, cash. Is it more than 10 lakhs? Is it more than 10 lakhs? It is more than 10 lakhs, yes or no? Meaning the limit of 3 crores is not available, limit of 2 crore. Up to 2 crore, your turnover should be there, yes or no? Only then you will be eligible for 44 AD. Sir, my turnover was 2 crores only. Getting my point? Now what if your turnover is 2.6 crores? The turnover is, can you follow 44 AD? Can you still follow 44 AD? Usually you don't follow 44 AD if your turnover is more than, but is it up to 3 crores? Now you'll have to check that out of this, turnover received in cash and other modes. First you'll have to check out of this turnover, how much turnover was received in cash. For example, 0.8 CR. 0. And what is the other modes? What is the other modes? Total 1.8 CR. 1.8, no? So out of total 2.6 crores, you have received 80 lakhs in cash and 1.8 crores by way of other modes. Yes or no? Other than cash. So tell me, how much should be received in cash? What is the limit? 5%. 5% of the total turnover. 5% will be? 5% will be 13 lakhs or less if you receive in cash. 13 lakhs or less if you receive in. That even if your turnover is more than 2 crores, but up to 5 crores, you will still be eligible for 44 AD. In your case, will you be eligible? Why? Because the turnover received in cash is more than the limit of 5%. So even if your turnover is not more than 3 crores, it is more than 2 crores, but up to 3 crores, still here 44 AD benefit is not available. And here compulsory you will maintain the books, get them audited, and the calculation of PGBP income will happen on by applying normal provisions. 44 AD not applicable. Got it, sir? Wait here. Now, for example, if in cash you have received 0.1 CR and 2.5 CR other modes, what is the total turnover, sir? 5% of that? 13 lakhs. So the turnover which you have received in cash should be 13 lakhs or less. How much is it? Is it less than 13 lakhs? Is it less than? Then even if your turnover is more than 2 crores, but since it does not exceed 3 crores, here you can now follow 44 AD. No need to maintain the books, no need to get it audited. Will you remember? Hello, sir. So this was your 44 AD main provision. One last time, I am repeating everything so that you remember. First point, who is the assessee? Resident, individual, HUF or firm, other than engaged in any business other than specified profession under section 44AA subsection 1, transport business, agency business or business of earning commission and brokerage. Other than these business, the assessee is engaged in any business. From that business, the turnover during the current previous year should not be more than then the assessee has the option to declare at least 8% of such turnover or as what? He can show 6% also instead of, but 6% of entire turnover he will not show. He will show 6% of that turnover which he has received on or before the due date of ROI by way of, for that turnover he can show 6%. Yes or no? Then if he comes under 44 AD, if he comes under separate deduction under 30 to 37(1), allowed or not allowed? Not allowed. Separate deduction under section 30 to 37(1), allowed or not allowed? It is assumed to have been claimed and it is allowed. Separately it will not be allowed. Yes or no? Will the assessee be required to maintain any books and get them audited? The answer is no. Provisions of 44 AD can be followed even if the turnover exceeds. Even if the turnover exceeds, but it should not exceed. If during the previous year, whatever turnover was there, out of that turnover, how much? 5% or less is received in cash. Then the limit of 2 crores will be increased to 3 crores. Up to 3 crores you can follow 44 AD. Yes or no? Understood? Now pay attention. See, this entire thing I have already told you, okay, no? Entire thing. Now, one very important point. See, I will discuss this. Okay. This is your previous year. Previous year 24-25. Now in this year, no, let's take an example that your turnover 2 crores. It can be 3 also, but we are not taking in example 3, we are taking an example of 2 crores. Yes or no? Turnover was within the limit of 2 crores. 2 crores or 3 crores as the case may be. So for example, turnover was less than or equal to 2 crores or 3 crores as the case may be. So in this year you have the option to choose 44 AD, meaning showing minimum 8% or more amount as your PGBP income. So in this year, since your turnover was within the limit, what you did? You followed 44 AD. Did you follow it? Yes. Meaning that you have shown either 6% or 8% as the case may be as your PGBP income. This you have done for the first time in this year. Okay. Now there is a requirement. There is a, once you follow 44 AD in any previous year, in any, then for the next 5 years, if your turnover is within limit, for those 5 years also you are supposed to follow 44 AD, meaning minimum 8% or more, 6% or more, you are supposed to show as your PGBP income for the next 5 years also. Provided for next 5 years, your turnover is within the limits. So let's take an example that what are the next 5 years? Come on, tell me. Next 5 years. So can I say it is 25, 26, 26, 27, 27, 28, 28, 29 and then 29. So we are assuming what? We are assuming that in every year, your turnover was within the limit. Your turnover was within the limit. Every year we are assuming it. Right now, somebody will have doubts, sir. Sir, what if in any year my turnover exceed? That I am going to tell you, don't worry. But first of all, for example, in all the years, my turnover was within the limit. So I am eligible to take 44 AD. This year also I can follow, this year I can follow, this year also I can follow. Yes or no? Meaning that if in the next 5 years, if your turnover is within the limit, now in the next 5 years, you have to compulsorily show minimum 8% of your turnover or 6% of your turnover, as the case may be, as your PGBP income. Meaning every year you are supposed to follow 44 AD. And if you follow 44 AD, that means every year whatever turnover is there, 6% or 8% of that turnover, minimum that much amount you are supposed to show as your PGBP income. Getting my point? Or a higher sum you have to show. So here you followed 44 AD. Here also you followed 44 AD. Every year you are following 44 AD. 44. But wait. This is your 28 within 5 years. Fourth year, your turnover was within the limit. You should have shown how much? Minimum 8% or 6% of this year's turnover as your PGBP income. But in this year, you did not follow 44 AD. Why? Why you did not follow? Because this year, no, there was heavy losses in your business. Even if your turnover was within the limit, you had to show minimum 6% or 8%. For example, this year your turnover was 1.5 crores. How much? Calculate 8% of 1.5 crores. 8%. 12 lakhs. So this year minimum 12 lakhs. Minimum 12 lakhs or a higher amount. Or a higher amount should be shown as your profit for this year. Yes or no? But what happened? No, this year your business incurred heavy losses. One employee ran away with money. Hello. Then there was fire in the factory. So many bad things happened. And this year your profit was only 1 lakh. Profit was only, you calculated on normal basis by taking all the deductions and deductions and allowances, depreciation, these, that, all the deductions. So you took the business income of this year minus the deductions, etc. You calculated the profits on normal basis. You came to know that bloody if I calculate the profits on normal basis, my profit for this year is not 12 lakh or more. It is actually less than 12 lakh. It is only 1 lakh. Or might be, there can be a loss also in this year. Now don't you think, since you have already followed 44 AD, there was a requirement that in the next 5 years, you will compulsorily follow? Meaning that even if in this year, your actual profits are less as compared to presumptive profits, will you be able to show those less profit, or you will have to show only 12 lakhs? You will have to only show how much? Then bloody who will follow 44 AD? Tell me. Just put yourself in the place of assessee. Even if whatever profits, actual profits you are earning, at least show how much? 8%. But remember, next 5 years. Next, whatever happens, you'll have to show minimum. Won't you get afraid of this? That what if bloody in any year my actual profits are less? Then in that case I will have to pay tax on higher amounts. Hello? Bullshit. I don't want to follow 44 AD. You will run away from 44 AD. Getting my point? So first they have put a condition that for the next 5 years you are going to follow. Promise that. Promise, I'll follow. But wait, in any of those years, if you want to profits lower than presumptive profits, lower than, how much was your actual profit in this year? 1 lakh. But how much you were supposed to show? You want to show lower profits in this year? You will be allowed to do it. No problem. We cannot. We cannot be a Hitler for you, no. 44 AD is for your benefit. And you don't keep on switching it again and again, again and again. That's why we are putting a condition that once you follow, you'll have to follow for the next 5 years. At least have some continuity, no? So that even we come to know that, okay, this assessee for the next 5 years is going to pay tax on presumptive basis. Getting my point? At least we should have also some clarity. But that does not mean that once you enter into 44 AD, you will get stuck over there. Even if your profits are less, we don't want to become a Hitler, and we don't want to charge tax on higher amounts, even if the profits for that year is lower. So do one thing, we'll give you an option. That if you want to show lower profits for any of the years, even if you were supposed to show 12 lakhs, but in that year, in any of those 5 years, if you want to show lower profits, we will allow you show your lower profits. Meaning, now in this year, instead of following 44 AD, follow normal provisions. Calculate your PGBP income by following normal provision. Take all the PGBP incomes, take the deduction separately, 30 to 37 and all. Yes or no? Don't take those disallowances, disallowed items you are supposed to remember. Now, even we would like to see that bloody in this year, how is that possible that you are not earning minimum 12 lakhs and you are earning less than that? Now in this year, compulsory books has to be maintained and they need to be audited also. But only if for this year your taxable income, total income is more than basic exemption limit. So if you want to show lower profits for this year, show, no problem. Show the lower profits. But those lower profits will be calculated as per normal provisions, by taking all the available deductions under section 32, 37(1). In this year, how the hell you are not earning 12 lakhs, not earning 8%, less than that you are earning? We would like to see that. So maintain the books of the business and get them compulsory audited. But you will do it only if for this year, your total income is also more than basic exemption limit. That means you are liable to pay tax for this year. Getting my point? So if you satisfy all these conditions, you can show lower profits. And now there will be one more restriction. Next 5 years. You will not be allowed the benefit of 44 AD. Now you cannot enter into 44 AD. Next, what will be the next 5 years? 29, 30, 30, 31, 31, 32, 32, 33, 33. Now even if for all these years, turnover was up to the limit of 2 crores or 3 crores, still 44 AD benefit will not be available. You will calculate your profits as per normal provision, and the turnover, if it exceeds 1 CR, compulsory maintain the books and get them audited, because now you will be covered by normal provisions. Getting my point? Will you remember this? Once you enter, can you exit within next 5 years? The answer is no. But option will be given only once, that in the next 5 years, if your profits are actually lower than the presumptive profits, you can show those profits. But for the next 5 years, now even if you are eligible, even if your turnover is within the limits, you will not be allowed to go out of, you will not be allowed to follow 44 AD. Yes or no? Will you remember this? Now pay attention. What was your previous year? Previous year 24, 25. In this previous year, your turnover was within the limit. So in this year, what are you going to show? 8% or 6% as the case may be, as your PGBP income. 8% or 6% of your turnover you are going to show. Now what happened in this year? In this year you followed 44 AD. You followed 44 AD. Now next 5 years, tell me. 25, 26, 26, 27, 27, 28, 28, 29 and 29, 30. Every year, your turnover, should be less than or equal to next 5 years. Sure? Now wait, in 27-28, which year? Your turnover exceeded your. You told that for the next 5 years, I have to stay in 44 AD. I wanted to stay in 44 AD. But in the third year only, my turnover exceeded the limit of 2 crores or 3 crores as the case may be. Can I now follow 44 AD here? Can I now follow 44 AD over here? The answer is no. Even if I want, I cannot follow. In the last example, no, I could have followed, but voluntarily I went out. See, even if my turnover was within the limits, still I did not follow 44 AD, even if I was eligible and I showed lower profits. Then, for the next 5 years, again I cannot re-enter. Getting my point? Here, tell me. Now, can I follow 44 AD? Can I follow 44 AD? Meaning, in this year, I will calculate my PGBP income as per normal provisions, separately taking the available deductions and keeping in mind the disallowances. For this year, compulsory books will be maintained and they will be audited also. Understood or not? Now tell me, next 5 years, can I again opt for 44 AD? Is there a restriction that for the next 5 years I cannot follow 44 AD now? I have not voluntarily come out. I have to come out because my turnover was more than 2 crores or 3 crores. What if in the immediately following year, again my turnover comes down to 2 crores. Can I again start following 44 AD? Can I again start following 44 AD or I will be restricted? The answer is yes. And for the next 5 years, again I can follow 44. First time. Now it will be again first time. I followed 44 AD. And next 5 years, now I will have to again follow. But this thing, does not usually happen. The moment the turnover exceeds in any business, from there the turnover goes on increasing. So there will be very less chance that once you have exceeded your turnover, yes or no, after that you will be again coming to 44 AD, because from there in any business growth is involved, yes or no. So your business will keep on growing, your turnover will be higher and higher and higher. There will be no requirement for you to again turn back to 44 AD. Yes or no? But still, you cannot predict the future. Yes or no? But still, even after this year, your turnover exceeded 2 crores. And in later on, in any of the years, again it comes below the turnover limits. Yes or no? Again, you can start following 44 AD. We will not put a restriction that for the next 5 years, you cannot again come back to 44 AD. Yes or no? I have tried my level best to teach you this section completely, fully, with whatever attention it requires. This is the end of 44 AD. Will you remember? Yes or no? Now 44 ADA and 44 AE. You remember only one thing, that in 44 ADA, 44 ADA, in 44 ADA, assessee must be a individual or a firm, cannot be. Other than LLP, firm has to be there. And HUFs are not covered here. Because HUFs cannot be involved in professions. We are talking about which professions? Those 11 professions. Do you remember? You are doing any of those specified profession. You are a resident individual or a firm other than LLP. You are doing any of those. And the gross receipt of such profession for the current previous year is up to 50 lakhs. Then again you will get an option. Under section 44 ADA, you will get an option to declare 50% of such gross receipt or a higher sum as a profit from this profession. As a profit from such profession. No need to separately claim 30 to 37.1. It will be assumed as if they are allowed, as if you have claimed and we have allowed. No need to maintain the book separately. No need to get them audited. But remember, chapter 6 deductions are available. As they are available from normal PGBP income, they will be available from presumptive PGBP income also. Yes or no? Chapter 6 deduction will not be denied. But only the deduction available under the PGBP head will not be allowed. Yes or no? Now, books of accounts, not required. Audit, not required. 44 ADA, done. Sir, restriction of 5 years, again, if you have followed 44 ADA in this year, next 5 years, compulsory you are supposed to follow 44 ADA? Not required. That is required only in 44 AD. That is required. So my question here is that in the previous year, 24-25, in this previous year, if your gross receipt, if your gross receipt was, say for example 40 lakhs, how much? Within the limit. Gross receipt is less than equal to 50 lakhs. Less than equal to 50 lakhs, meaning within the limit. So for this gross profit, how much? 50% or higher sum. 50% or higher sum, you are supposed to show as what? PGBP income. Yes or no? And you have shown it. Meaning for 24-25, you have followed 44 ADA. Now there is no requirement that for the next 5 years, if the gross receipt is within the limit, you will have to compulsorily follow this. No, there is no requirement. Meaning in the immediately next year, meaning in the previous year, 25-26, even if your gross receipt was within the limit of 50 lakhs, you should have followed 44 ADA, but you did not follow. Meaning for this gross receipt, 50% or higher amount, instead of showing this, you showed a lower amount. Can you do it? The answer is yes, you can do it. But wait, if you do this, even we would love to see that why the bloody hell this year your profits is less than 50%. Now lower profits you are showing, no, has to be calculated as per normal provisions. Has to be calculated as per. And in this year, compulsory maintain the books and get them audited, but only if for this year your total income was more than basic exemption limit, meaning you are liable to pay tax. Then maintain the books also, get them audited also, because even we would like to see that how your profits fell below 50%. Now wait. Next year, what is the next year? In this year, again your gross receipt is within the limit. Now you want to follow 44 ADA, meaning want to show 50% or more. Can you do it? The answer is yes, you can do it. So there is no requirement that you have to follow for next 5 years. And there is also no restriction that once you go out, again you cannot re-enter in 44 ADA. Again in the immediately next year, you can start following 44 ADA. That restriction was only there for 44 AD and not 44 ADA. Will you remember this? Everything remains same. But only this small difference was there. Got it? Here how much you will show? 8%, 6% or 50%? Minimum 50% of your gross receipt or a higher sum you have to show as a profit. But your gross receipt should not be more than, but wait, even if your gross receipt is more than 50 lakhs, still you can follow 44 ADA. This similar type of thing was there in 44 AD also. Out of the total gross receipts, out of the 5% or less gross receipt is in, then even if your gross receipt is more than 50 lakhs, still you can follow 44 ADA, provided your gross receipt should not be more than. So the limit of 50 lakhs will be increased to 75 lakhs, will be increased to, if during the year whatever gross receipt is there, out of that total gross receipts, 5% or less is in cash. So my question is, previous year 24-25, your gross receipt was 48 lakhs. How much? Out of this, in cash and other modes, in cash you have received 18 lakhs and other modes you have received, tell me, will you take 5% of this? No need to take. Why? Because your gross receipt is within the limit of 50 lakhs. Your gross receipt is within the limit of 3 lakhs. Show 50%. Show 50%. Yes or no? 50% of this, 50% of this. Minimum amount. You will have to show as your PGBP income. But wait. Now if your gross receipt was 58 lakhs. How much? So tell me, how much you have received in cash? How much you have received in cash? 5% of this. 2 lakh? 2 lakh should be received in cash. 2,90,000 or less should be received in. Then only your limit will be 75. Then only your limit will be, how much you have received in cash? Amount is more than. So even if your turnover is more than 50 but less than equal to 75, still you cannot follow 44 ADA, because the condition to follow 44 ADA is what? Condition to take that 75 limit is what? That out of the total gross receipt, 5% or less should be in. But you are earning more than 5% in cash, meaning that 75 lakh limit is not available, only the limit of 50. Tell me, is your turnover less than equal to 50? No, you cannot follow 44 ADA. For you, compulsory books must be maintained, get them audited, calculate your profit as per normal provisions. Will you remember? This was your 44. ADA. Most important sections are most important sections from PGBP. And these, sections are given stepmotherly treatment by the students. You will do entire PGBP, but you will not do these sections. Without doing these sections, you are going in the exam. Straight question, if they will ask you, no, now you will be able to solve that entire question and get the full marks. Don't leave these type of questions. Okay, next one. Now, yes. Now 44A, last section. Assessee is a transporter. Is in the business of transporting passengers? No, transporting goods. So the business of the assessee is plying, hiring, leasing of, and he must not own more than 10 goods carriages at any time during the, meaning starting from first day of the previous year till last day of the previous year, every day the number of vehicles owned by him should be 10 or less, 10 or less, 10 or less. Even for a single day, the ownership of the vehicle was more than 44A, benefit will be denied. So if you want to claim 44A, starting from 1st April till 31st March, the number of goods carriages owned by you should be either 10 or less than 10 throughout the year. Now, which type of assessee will get the benefit? All assessees. All assessees who is engaged in the business of plying, hiring, leasing of, and not owning more than 10 goods carriages at any time during the, then they can follow 44. And once they decide to follow 44A, they will have to show a minimum amount per goods carriage. Minimum amount per goods carriage or more as their PGBP income on a presumptive basis. Yes or no? Now, such assessee has the option to declare option to this minimum amount or this minimum amount, or a higher sum, as their PGBP income. What is the minimum amount? 7,500 per month, or even part of the month of ownership. Did I say per month of use or per month of ownership? You just have to check that during the previous year, how many months you have owned the vehicle. Months of ownership you have to check. Hello? They will deliberately give you that out of these months, how many months the vehicle was actually used. So you own the vehicle for 12 months. You own the vehicle for the minimum income which you are calculating, you will have to calculate for ownership months. How many months? How many months of ownership was there? 12 months. So for 12 months, this minimum amount should be calculated. Yes or no? But wait, during this year, the vehicle was purchased on 19th of December. Vehicle was purchased on. So ownership started from December month, no? December month, full month will be counted. Even for part of the month's ownership also, this minimum amount has to be calculated. Hello? You cannot say that for 1 month ownership, minimum 7,500. So for 12 days ownership, how much should be the income? No. Proportionate amount not to be done. Even for a full month of ownership, this minimum amount, and even for part of the month ownership, this amount. So when did you buy the vehicle? 19th December. So you became the owner from December month. Count the full December month. December, January, February and March. How many months? 4 months. For 4 months, every month minimum this much amount you are supposed to show. Yes or no? But wait. You already have a vehicle in the beginning of the year. Already have a vehicle in the 1st April. You are the owner of that vehicle. You are the owner in the April also, May also, June also, July also. Yes or no? You sold that vehicle on 1st December. When did you sold the vehicle? So you were the owner till 1st December. April, May, June, July, August, September, October. 8 months, 1 day. 1 day off. December also you were the owner. Count full December. So this is bad. No. Don't sell on 1st December. Sell on 30th November. Bloody, you are selling on the 1st December, meaning December 1 day. You are having ownership, no? We'll count the full December. Yes or no? Hello, sir. So did you understand per month or part of the month? For every month of ownership or even for the part of the month's ownership, even for the minimum this much amount or a higher sum or a you have to show as your profit. You have to show as your 7,500 per month of ownership, or even for part of the month ownership you are going to show 7,500 as your income or a higher sum as your PGBP income. But if the goods carriage, is a heavy goods vehicle, HGV means, then you cannot show this lower amount. No. For heavy goods vehicle, we will not accept this amount as your presumptive income. In the case of heavy goods vehicle, you are going to show 1,000 rupees as your income. 1,000 rupees as your per ton of the gross vehicle weight. 1,000 rupees per ton of your. Sir, when will I say that the vehicle is a heavy goods vehicle? If the gross vehicle weight is greater than equal to 12 tons. Gross vehicle weight, meaning that the weight of the body of the vehicle plus the load which it can carry as per the RC book. Yes or no? The load which it can carry plus the weight of the body of the vehicle. Yes or no? Entire body of the vehicle plus the load which it can carry. If the total weight is known as gross vehicle weight, this should be 12 tons or more. Then the vehicle is heavy goods vehicle. Then for every ton of gross vehicle weight, for every ton of gross vehicle weight, you will show how much? 1,000 rupees. 1,000 rupees as your income. Yes or no? For example, the gross vehicle weight was 9 ton. It was? So how much will you show? 7,000. Because the vehicle is not a heavy goods vehicle. What if the gross vehicle weight was 18 tons? Is the vehicle heavy goods vehicle? Hello? How much is the gross vehicle weight? Per ton, how much you will show? So for 18 ton, it should be 18,000. 18,000 for every month of ownership or part of the month ownership. Will you be able to calculate? Yes or no? This will be your PGBP income or a higher sum. Now see, 30 to 37 months separately allowed? No. Assumed to have been claimed and it is allowed. No need to claim it separately. But wait, chapter 6 deduction will still be allowed. Just like from your normal PGBP income, you can claim chapter 6 deduction. From presumptive PGBP income also you can claim chapter 6 deduction later on from your GTI. Only those deductions which are available under PGBP head are denied. It will be assumed as if you have claimed and we have allowed. And this income you are supposed to show as your PGBP income. Will you remember? No need to maintain the books separately. No need to get them audited. Now, is there any requirement of following 44AE for the next 5 years? Hello? No requirement. Once you follow 44AE in this year, next year you can show lower profits. Next year you can show, but in that year you will have to compulsorily maintain the books and get them audited. But sir, in the next year, if you are not following 44A, you are showing lower profits as compared to presumptive income, you are showing lower profits in the next year. Then for the next 5 years, again you cannot follow 44A. No requirement like that. In the immediately following year, again you start follow 44A. Getting my point? Hello sir. So tell me, simple thing I am asking you. Previous year 24, 25. The number of vehicles less than equal to 10. Less than equal to? So you followed 44A. You followed 7,500 per month or a higher amount. 1,000 per ton of gross vehicle weight or higher amount. You have shown as your profit. Is there a requirement next 5 years also follow 44A? No requirement. So in 25, 26, even if the number of vehicle was less than equal to 10, even if you were eligible for 44A but you did not follow 44A, did you show 7,500 or more? 1,000 per ton or more? No, you showed lower profits in this year. Meaning you did not follow 44A and you showed lower profits. Those lower profits will be calculated as per normal provisions by taking all the available deductions and all. And in this year, compulsory you will maintain the books and get them audited. Even if this year's total income is not more than basic exemption limit. Total income may be or may not be more than basic exemption limit. Compulsory books are to be maintained and they must be audited. Requirement of total income being more than basic exemption limit was there in 44AD and 44ADA and not in 44A. Will you remember everyone? Now in 26-27, your number of vehicle is less than equal to 10. Again you want to follow 44A. Can you follow 44A? The answer is yes. There is no restriction that once you stop following for the next 5 years, we are not going to give you the benefit. Next 5 years, anytime if you want to follow, you can follow. Got it, sir? This was 44A and this is the end of the chapter. I hope you enjoyed and I hope you will not remember these things for your exam. You will remember? Sure. Tell me frankly, honestly, did you do all these provisions in your first attempt? Now, did you understand how easy these provisions are? Entire PGBP head, did you get any problem anywhere? All the provisions are very easy, provided you are learning from a correct person. Say thank you. Now we'll start with capital gains. Okay. So, capital gain we are going to start after a small break. Take a small break. Today? Correct time, no?